Certain sectors of the market seem to be in a fear cycle, meaning many quality businesses seem to be selling off due to the fears of a recession. Most notably, it seems to be affecting the consumer discretionary sector. In that sector as a whole, US-based companies with at least a $5 billion market cap have only returned 1.6% year to date. Autos seem to be the hardest hit, down 11%. It makes sense considering they are highly correlated with interest rates. But the business I'm discussing today has fallen 18% year to date. This is despite their strong balance sheet and growth in both the top and bottom line every year since 2009. The lone exception to this is the COVID year of 2021. This business is Ulta Beauty, ticker ULTA. Welcome to The Quality Investor. Ulta Beauty is labeled as a consumer discretionary business. I believe that is an inaccurate label, however. Cosmetics have shown themselves to be resistant to recessionary forces. They also seem to be inoculated from online retail forces such as Amazon. My thesis for this is due to the product that they sell. Cosmetics is in a unique category of products where buying in person has remained strong. Cosmetics consumers seek out the experience of a beauty store because they can try out the products in person. This is important for cosmetics. The only way to match a product to a person's unique skin tone, for example, is in person. You simply cannot replicate that process online. And once a person finds a brand they like, they buy it online. But Ulta has that covered as well. Before continue on, please remember to like this video and subscribe to the channel so you can stay on top of all the quality businesses in the market. Ulta Beauty has this to say about their online experience. In fiscal 2023, 18% of our loyalty members shop both in Ulta Beauty stores and through our digital platforms. Our e-commerce platform has two key roles: generating direct channel sales and profits by communicating with our guests in an interactive, enjoyable way that reinforces the Ulta Beauty brand, and driving traffic to our stores, website, and native applications. As part of our digital store transformation during fiscal 2023, we substantially completed a large-scale upgrade of our end-to-end e-commerce platform and migrated to a new modernized platform to enable more seamless guest experience. Our omnichannel guests are extremely valuable, historically spending nearly 3 times as much as retail-only guests. And looking at their operating cash, capital expenditure, and free cash flow here, you can see Ulta really ramping up their CapEx spend in the last couple of years. And this fiscal year 2024, they spent $435 million. This is actually what they consider their fiscal 23. And then the prior year here, they had $300 million. A bulk of that CapEx spending has been on their online presence. And speaking of the loyalty program, this is a huge driver for Ulta sales and growth. Ulta Beauty considers the beauty enthusiast as their target consumer, and their breakdown of that market, over 70 million beauty enthusiasts in the United States alone, they consider 66% of those enthusiasts to be all shoppers for beauty, but they estimate 83% of dollars spent on beauty products are from those beauty enthusiasts. So Ulta is highly targeting this segment of the market and trying to capture all of that spending. And Ulta has a best-in-class loyalty program. 95% of total Ulta Beauty sales are made by their rewards members. And you can see that very healthy growth over the last 5 years of users into that loyalty program. So of course, this enables them to capture valuable data that can create even more targeted programs to the overall beauty enthusiast to further capture their spending. So why is Ulta down 18% year to date and 20% on a 1-year basis? The main reason is some remarks the CEO David Kimball made on April 3rd. This article from April 3rd in Reuters explains, Ulta Beauty's slumps as CEO warns of lackluster first quarter demand drags peers. Shares of Ulta Beauty tumbled as much as 14.5% on Wednesday after executives flagged a slowdown in demand across categories in the first quarter and stiff competition weighing on peers e.l.f. Beauty, Coty, and Estee Lauder. The beauty retailer now anticipates its total category to increase at a moderate single-digit range after years of strong growth. What we've seen so far is a slowdown in the total category across price points and segments. That's a bit earlier and a bit bigger than we thought, says the CEO. And later in the article, we believe the decline in shares reflects uncertainty rather than a more tangible understanding of earnings downside. William Blair, analyst of Dillon Carden, wrote. Ulta last month forecast annual profit below Wall Street estimates as supply chain costs and increased promotions squeezed its margins. However, Ulta reiterated on Wednesday its comparable sales target of 4% to 5% growth for the year. What's interesting to me is they simply stated that they're going to be on the low end of their guidance. They didn't even revise their guidance downwards. But the market was generally disappointed with Ulta's guidance for the year in the first place. But who's to say that Wall Street itself wasn't overly optimistic about retail? It's no secret that consumers have been cutting spending due to higher interest rates and fears over a poor labor market. Starbucks, Lululemon, Nike, McDonald's, and many other big brands have all been punished by the market this year due to the less than expected results. Starbucks notwithstanding, I believe that this is due to a fear of a recession rather than the company's fundamentals. This is an article that was featured in the Motley Fool, why Ulta Beauty stock dropped by almost 23% last month. The main line from the article I wanted to point out was, for fiscal 2024, Ulta Beauty has shared its belief that same-store sales would decrease by just 4 to 5%. However, it sounds like it would be closer to 4% based on management's most recent comments. In my view, this is hardly an insurmountable headwind for the company considering sales are still growing. Additionally, Ulta Beauty's management had expected its operating profit margin to go down from its 16% margin in fiscal 2023. However, it's still expecting an operating margin of about 14% for fiscal 2024, which remains strong compared to other retail businesses. The point here is that the fundamentals of Ulta are still very strong. So the market is really overreacting in a very negative way to general fears of a recession in the market. I do think it'll be interesting when the next earnings comes out to see how much of this negative sentiment has been built into the current price. Even if they have slightly better than expected results, there could be a pretty big jump for Ulta in the market. So, what is the current valuation for Ulta? What sort of growth should we expect to assess if this quality business is truly undervalued? But before we dive into those numbers, I want to give a quick update. This will be the last time I feature Ulta Beauty on this channel. I've done videos on them in the past, and I believe that they're a very strong business. I recently accepted a data engineering position with Ulta Beauty, and my first day of employment is tomorrow. While I am excited to begin there, I will have access to information before the public has access to that same information. And because of that, I do not want to jeopardize myself to any potential violation around trading laws or SEC rules. Therefore, I will not comment on Ulta in any way after I begin my employment. With that said, let's take a look at the numbers. So I want to start with the revenue model for Ulta. Currently, they have 1,385 stores. And on my base case, I'm projecting that store count to grow to 1,600 by year 10. That 1,600 is the midpoint of what their long-term store growth is projected to be, between 15 and 1,700 stores. So while this is my base case at 1,600, my bull case has them growing to 1,700 stores, and my bear case has them going only to the 1,500 stores. And then based on that, I'm calculating out what the merchandise sales per store is. So in their most recent fiscal year, they did 8.092 million in total sales per store. You can see here in 2022 that strong sales growth after the COVID year of 2021, but it has slowed down a bit to 7.4% year over year this past fiscal year. Combining that with their total store growth, we have total sales growing at just under 10% in this past fiscal year. So in trying to capture that slowdown in sales growth over the next 10 years, I am only projecting that merchandise sales per store to grow pretty slowly. Total of 3% compound annually over the next 10 years. And of course, combining that with the store count growth at 1.5% annually over the next 10 years, that gives us a 10-year compound annual growth rate for total sales for Ulta Beauty at just over 4.5% per year. So that's a lot slower sales growth than what they have been doing in the past 5 years or so. So as we go through the rest of the valuation, keep that in mind that this projected sales growth going forward is a lot lower than the historical norm. So once we look at the total growth rate projections for the rest of the numbers, we can see here how much free cash flow this business ultimately generates. And remember, free cash flow is what leads to higher share price. So I'm going with a 16% operating margin at year 10. The operating margin I'm using for year 1 is at 14%, so I'm expecting it to grow to 16% by year 10. And our current net margin is at about 10.6%, nearly 1% less than what they did in the prior year, and then ultimately growing to 12.16% at year 10. So I'm ultimately projecting operating income to grow about 5.2% and net income to grow about by 5.16% over the next 10 years. They do have very strong earnings per share growth, however, at 8.6% over the next 10 years. Primarily, that's due to their very strong share buyback program. They are projected to buy back about 4% of their shares in 2024. And ultimately accounting for all of that, that gives us a free cash flow growth rate over the next 10 years of 6%, far below their 10-year historical growth rate at 26%. And one thing to keep in mind, one reason their free cash flow did drop down 11% in the prior year was due to that strong investment that they're making and their online presence. That ultimately gives us a discounted cash flow price here of $564.16. Keep in mind that their 52-week high is at just over $567. They hit that back in March. So I quickly wanted to go through my bear base and bull assumptions I'm making here. So for operating margin, I have the bull case at 17% by year 10 and at 15% for the bear case for operating margin. Ultimately, their free cash flow conversion here, their 5-year average for free cash flow conversion is $1.51. For my base case, I'm projecting their free cash flow conversion to be at 88 cents by year 10, 90 cents for the bull and 86 cents for the bear case. And we can see the total revenue projections I have down here. 2.25% growth for the bear case, 4.5% growth in the revenue for the base case, and 7% growth in revenue for the bull case. And ultimately, the free cash flow margin, I think, are very in line with what we're currently seeing from Ulta. So their current trailing 12 free cash flow margin is at 9.3%. Bear case would have that going to 9.68%, 10.7% for the base case, and 11.8% for the bull case. So even on the bull case, I'm not projecting any crazy growth here. So Ulta closed the day on Friday at $401.59. My DCF models here, even for the bear case, is higher at what their current price is at $433.35. I have $564.16 for my base case and $743.97 for the bull case. The exit multiple valuation has them at $489.74, and that's using a PE comp here of about 18.8 for my comparables. And you can see their current trailing 12 PE is at 15.4, which is well below their 5 and 10 year averages. So this is the cheapest Ulta Beauty has been since that COVID year. So even with almost no growth in the bear case, there's about a 12.8% upside for the bear case, 34% upside on the base case, and a 63% upside if they exhibit slightly better than average growth over the next 10 years. And of course, combining these 3 valuation averages for a current buy price, I would like about a 20% margin of safety with this business due to the fact that it's a retail business. That gives us a current buy price at $436.86, with their forward PE expanding to about 16.6. Currently, their forward PE sits at 15.2. In fact, due to the weakness Ulta has been experiencing in the last few weeks, their price has been dipping down into a 30% margin of safety range at $382.25. It's very possible over the next couple of weeks until their earnings come out that Ulta will be trading in the $380 to $400 range here. And if their earnings are even slightly better than expected, they should have a pretty big pop in their share price. And of course, one other thing I always like with businesses is a high ROIC. And you can see Ulta Beauty currently has a 33% ROIC, which has been steadily growing over the last 10 years. So all in all, I think with the broader weakness that we're seeing in the market right now, and some fears of a recession that especially may hit the consumer, Ulta Beauty is a gift right now. This business has an incredibly strong balance sheet. They have no debt. They have strong cash generation, and they have a long runway of future growth, not only in the US, as we see with store expansion up to possibly 1,700 stores, but possibly even in Mexico or Canada down the road. And remember, cosmetics are a product that consumers like to go to the store to try out new things. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.